You've got $100, not enough to flip into millions, but just enough to start a journey that can change everything. Today, I'll show you how to use your $100 plus a demo account to get a funded prop firm account in 3 months. Stick with me. Now, let's be real. $100 won't change your life, but a 10,000 funded account might. The goal isn't to trade with $100, it's to train with it. Realistically, everybody that gets into trading wants to actually make money. But to make money, you have to be particular about how you want to go about it. And I think that's the number one step where people fail, not having a clear goal or a clear direction. Now, let's think about trading and how trading has evolved. The prop firm is a very, very volatile space, and it came as a disruptor. And what it basically does is you get your skills and they have the money. So it's like a collaboration. So you go and apply for an account with a fee, right? With certain rules to pass for phase 1, for phase 2, and then you get funded. So say you want to be making $1,000 or $2,000 as an extra income on a monthly basis. With a $100 account, that's a very, very, very long shot. But it's relatively easier with prop firms, provided you know what you're doing. So if you just want to get into trading and $100 is all you have, it's best advised to go through the prop firm route, right? That's why the prop firm route makes sense to me, because the risk to reward makes a whole lot of sense. And they have accounts varying from as low as 5,000 to as much as 500,000, depending on the firm, right? So, and what exactly do you need to pass? Of course, your strategy, consistency, discipline, and risk control. Number one key job role of a trader is risk management, not just making money, but managing your risk. And most of these prop firms lay emphasis on risk management, right? And that's what the next 90 days is going to also be about. Now, let's take it. The first 2 months, we use the first 60 days to build skills in a risk-free environment. Here's how. First of all, you identify the account you'd want to get, be it a 10K account, but mostly with a $100 account, it will be around that range, be between a $5,000 to a $10,000 account, right? And I always try to put realistic targets. So, and one of the best things to do again as traders is always on that promise to over deliver, even for yourself. It helps to manage expectations. So a 3 to 5% monthly target is very, very realistic. Yes, and on average, you would most likely do more than that. But setting your target or a psychological target to a 3 to 5% makes you trade with good expectations. And what does that give on a 10K account? 3 to 5% is $300 to $500. And of course, if you feel very confident, you can go higher, maybe a 50K or a 100K. Still the same 3 to 5%. On a 50K, that gives what? That's about $1,500 to $2,500 monthly. And on 100K, that's about $3,000 to $5,000. So you see that the metrics remains the same, but the figure changes based on the account size you're trading. And all of those accounts are available at a fee. But firstly, you need to know what you're doing. So open a demo account with a broker or a platform that the prop firm uses. Majority of the prop firms use MetaTrader 5, right? So for a broker, I actually do recommend Xness. I have a link in my bio, so click the link to register with Xness to create a demo account and fund it with the account, with the account size of the prop firm you want to get. So if you're getting a 10K, fund the demo 10K. If you're getting a 100K, fund the 100K. And the idea of all of this is to set the demo account up with the same amount and trade it like it's real, right? No over risking, no over trading, no over leveraging. Majorly following the rules you create by yourself. And in my recent video that I uploaded, I also broke down certain metrics that would aid you not to blow your account, right? So you can click the link in the description. I'll attach it, right? So you can find that video and watch it to get proper understanding, right? So what we're doing in the first 2 months is, just as with every business, like I said, trading is a business, is to understand our business plan and our business model and how exactly we want to go about it. So it's more of data gathering and confidence building. So we're journaling our trades, we're tracking our stats, tracking our win rate, our risk to reward, maximum drawdown and stuff, right? And also sticking to the prop firm rules. Majority of the prop firm rules revolve around an 8% to 10% profit target, a 5% daily loss, and a 10% overall loss, right? So sticking with all of those rules and managing the account properly, right? And also maintaining good discipline and managing expectations, right? So then the most important thing in all of this is building a prop strategy. Building a prop strategy or a prop system, right, means your trading, your strategy you're going to use has to be involved. You determine what type of strategy you're going to use. Are you going to be using support and resistance, Fibonacci? Is it break and retest? There are a million and one ways to make money from the market, and trust me, everything works. The most important thing is just to get the metrics and understand the data to know the accuracy and best times to use them. I'll link a strategy video, one of my recent uploads also to this video, so it might also help. But of course, you can use any strategy you want to, identifying your quality setups. How often do you trade? Are you going to be day trading with the account? Are you going to be swing trading? Are you going to be intraday? Right? All of these metrics should be known before, and that's why we are using it in a risk-free environment. Because one very, very important thing to note is to be consistently profitable in trading, you are the one that has to be consistent, because the market is never consistent. Today it can trend, tomorrow it can range, and the trend can be bullish, can be bearish. So you see all of these rational movements in the market. The only way to make consistent profits from it is when you have a particular way you approach the market. So you know that, okay, I'm going to this market, I'm looking for buys because the structure is bullish. So you're not concerned in any form of sales at all. And if you don't see opportunity, you step out. Or when you get your opportunity, you take the trade. That's the only way to make consistent profits in the market, by being consistent in our approach, not the market, right? And also stick to your very good risk management system, risking 1 to 2% per trade. I explained this in my previous video, same with the video I was talking about earlier on how not to blow your account. Risking anywhere between 1 to 2% fixed per trade, and setting your daily loss limit. So whatever the prop firm account has limit, be it 4% or 5%, always trade with that range too, right? Because we are trying to model it exactly as we can, right? And also journal, indicate the reasons why you're taking the trade, the particular setup, how you feel when you're taking the trade. I think I might do a video on how to journal properly, but that will be in the coming days, right? And focus on a range of pairs. You don't need to monitor everything in the market. Just have your best pairs, probably between 3 to 5. Me personally, I monitor around 5 pairs, but it can be anything, but just a range, and it really helps to not miss opportunities in the market, right? So after the 60 days, right, if your demo account is still alive after 60 days with no rules violated, and you've even passed maybe first phase, or you've accumulated possible amount in percentages, you are ready, right? So the major thing is, next thing to do, you apply for or with a prop firm. We have FTMO, Fundednext, Funding Traders, the 5%ers. There are a very, very wide range of trusted prop firms out there, right? And that's the best thing to do. I would drop some of the links in the description, but of course you can also do your own due diligence and research on prop firms that are verified, right? And use your $100 to get an account with them. And if you are feeling good and you're feeling confident, you can get more, right? And what this helps with is, you are trading with confidence, because like I said, it's a business you've tested. You've seen that, okay, this thing is not 100% accurate too, but with a 70% accuracy, and me risking a particular 1:3 or 1:2, or even if it is a 1:1 system, but I always preach for a higher risk reward, at least 1:2, right? Even with a 50% system, you'll be profitable, just like as I indicated in my recent video too. So the whole idea is understanding all of these metrics and sticking with it, right? And of course, even if you fail, your journal will always point out exactly where you went wrong, or where it went wrong, or maybe it wasn't just a favorable market condition. But whatever it's going to be, even if you fail, you've earned the skill to try again with confidence, knowing that you know exactly what you're doing. And I mean, failure with prop firms is not exactly you blowing the account. it just means you lost 10% of the overall account, which is still very fair, and you can always try again. But practicing it 2 months prior just makes everything make a whole lot of sense for you, like you having your data right and your figures right. So the key takeaway here is you don't really need to flip your $100. You just need to train with it. The smartest way to grow in forex is by building with smaller amounts, and in this case $100 as a stepping stone. You master your strategy, you prove your discipline, then you get your funded account and you start applying for payouts. That's how you build long-term profitability in trading. Alright, please guys, if you enjoyed this content, please subscribe, like and share to other beginner traders, and follow for more. Bye guys.